Good everyone.
A hat
Okay, it's
man
good
is
to
in
hear
the
someone
house.
breathing, right? We're alive and kicking here at IBD Live. Very good. I think I stopped the share and I think I see all four faces on my live video here. Excellent. Good morning, everybody. Welcome to IBD Live. My name is David Saito Chung. I'm Deputy Markets Editor at investors.com. Also help out with Leaderboard. And we hope you're enjoying the show in our third month of IBD Live. And we've got a great crew here once again. To my right, Chris Gessel, the creator of this show, I have to say, a great idea and sharing what we talk about every morning. Our Chief Content Officer, longtime friend. And behind Chris is Justin Nielsen, Research Director, a longtime IBD expert. And across from me, Mike Webster. Good morning to you, Mike, our Chief Investment and Market Strategist. First things off, we love to mention this legal disclosure, get it out of the way. All the stocks and ETFs that we discuss on this program are meant for educational and informational purposes only. Please do your own research or consult with a financial advisor before you make any decisions on the stocks. We have Rachel Fox helping us, our Twitter-in-chief markets writer, going to do a lot of tweets and also working on some nice recap videos. You will definitely check out her social posts at hashtag IBD Live on Twitter. And also a big shout out to my fellow senior markets writer, IBD leaderboard editor, Ken Shreve, who's going to help us out with the Q&A. Why don't we take it around the horn? I hope I didn't miss anything other than the fact that if you're brand new to IBD Live, we welcome you with open arms. We're glad you're joining our growing community. Please use that the Q&A folder at the bottom of your Zoom platform to interact with all of us with good questions, and we'll do our best to answer as many as possible. So, Chris, what's in your eye right now regarding the market?
Well, it's one that we've talked about a number of times, but Axon, the former Taser, continues to look pretty good and had a big up day on Friday. And then despite all the turmoil yesterday in the market, a very modest pullback inside days. So we'll take a look at that and see how it's setting up.
Very good, very good. And then Justin, you have a couple stocks or ETFs in mind?
Yeah, you know what? I was taking a look at Snap Inc. this morning. It just, it broke out last, last Friday or 2 Fridays ago, and it just yesterday was a pretty decent pullback. Seems like it got support at the high of its previous base. So yeah, we're just kind of looking at these stocks that held up well yesterday, and I think Snap is one of them.
Very good. And I think, Mike, you were debating whether to give 2 or 3 or even 4 stocks?
Or 7, I don't know. I could really, I'm going to be looking at the China stocks to see how they're faring out. So I think the best one to look at is BABA. I'm not trading it, but just to get a sense of, how the market's handling the whole
How's
virus.
that possible? You're not trading it?
I only have 12 stocks right now. Can you believe it? I feel so concentrated.
If I might jump in here, I'm going to add a stock as well because, the China news is still front and center for everybody. It's really impacted the oil markets. Oil is down more than 8-9% year to date. And so maybe all of you have been noticing a big drop in solar energy firms. I'd like to mention SEDG SolarEdge because it could be threatening to round trip its 16% gain from a breakout point. So, it sort of highlights the importance of always keeping in mind your sell rules in addition to excellent selection criteria and buy rules. We're going to quickly go through the news. I got a big help from both Ed Carson, also on the show on a pretty regular basis, and Ken Shreve. A lot of news. First of all, earnings week. We've got tons of S&P 500 companies and smaller companies reporting. Right now, Pfizer, PFE, 3M, MMM, and UTX, that's a trio of Dow Jones stocks, evidently under selling pressure before the market opened on quarterly results. JP Morgan has issued some kind of, I suppose it's a valuation downgrade on Beyond Meat, that's BYND, the leader among public companies for plant-based meat products. They downgraded it to neutral from overweight. Apple, AAPL, and Advanced Micro Devices, AMD, both of those earnings will be coming out after the close, and those are indicated sharply higher right now. Part of our wondering why chips are up so strong in the pre-market may have to do with the fact that reportedly UK is giving the green light to start deploying 5G related infrastructure. And that means using perhaps some Huawei technology, which in turn could benefit supplying chip makers. Now, Leaderboard stock MasterCard is going to report Wednesday before it opens, so that's going to be coming up. And Tesla and ServiceNow, TSLA and NOW, they report after the close on Wednesday. And then Vertex Pharmaceutical, we talked a lot about that stock in the biotech group. That's going to be Thursday after the close. Going back to Apple, I would like to highlight that it's on pace to accelerate its earnings growth. For the December quarter, it's expected to be $4.54, up 9% on a 5% sales jump. And AMD, Advanced Micro Devices, they're expecting 31 cents a share on the consensus on the street, according to FactSet, and with revenue up 49%, earnings of 31 cents, up 287%. Also today, after the close, or I think we have eBay, we have Stryker might have reported, I haven't checked yet. Starbucks will also report. And let's see, Lockheed Martin probably came out before the open too, so we'll check that. We have the Fed meeting that starts today, ends tomorrow. I'm a little surprised by the fact that there's a 12.7% chance that we have a hike in interest rates, 25 basis points based on the CME Fed Watch. Almost a 13% probability of a rate hike after cut rates
I'm shocked
3 times. Yeah, I'm a little shocked too. But in all, it looks like we're probably going to stay put with a Fed funds target rate of 1.5% to 1.75%. You might have noticed in our stock market today coverage that we've been highlighting the plummet in bond yields, particularly on the benchmark 10-year bond. It's now around 1.61%. That's down from 1.88% at the start of the year. Looks like let's go over to the QQQ. I think it was up 0.7% or so, just in line with the other indexes. I'm going to share the screen.
Just a real quick housekeeping thing. It seems like a lot of people are seeing only one speaker on their screen at a time. Usually, I find that if I go up to speaker view in the right-hand corner and change that to gallery view, but it's just strange that a lot of people seem like it got changed for them. Right. Any ideas on that? Okay.
Maybe it was Dave.
Okay, well, we'll go with.
Oh, okay.
we're getting word that it's been fixed from our internal quality control, Paul.
Oh, that's good. That's good.
Go
so
ahead,
I've
Dave.
got the all I did was just share a screen. You know, no wizardry beyond that. I'm showing a 5-minute pre-market chart of QQQ, and you can see that it's trading. Roughly, I guess, around 219.6 is the highest ask right now, and that's up from around 217 yesterday. I also want to highlight the VIX, which we can see on market here. If I can bring it over here like this, there we go. And we noticed obviously a big spike. It was up 24% so far for the week, but nowhere near some of these trade war related spikes. So that's something maybe to watch for. As Juan Arencibi in fact wrote in yesterday's big picture, we noted this big move, but it's just not at a high enough level to really expect a short-term bottom. But we'll keep an eye on those indicators. And
it did. If you go to the psychological market indicators page,
let's do that.
Investors.com, it did get 10% or 20% above the 10-day moving average, and that's where a lot of times we'll see things turn around. But will,
Especially if you see like a reversal.
yeah, but
Yeah.
usually that's you need to wait for the confirmation and see
Right.
it close
that
below it.
that reversal, right?
But let's what's interesting is so the Qs took out yesterday's high here at the open. If we can jump back to those on the, and it'll be interesting to see how it handles that, the first few minutes of trading. Like yesterday, we saw the market, open down and then start rallying back, and basically it held it and moved a little bit higher the whole day. So that will definitely something to watch here.
And the market really came into exactly where you would think. I mean, if you draw the channel line underneath it, it just came right down to that, as well as right to, support. So yesterday was, I think ideal, like to have a nice shakeout like that, bring fear back into the market, and it didn't break the chart.
Yeah, it's just a good.
It was actually better than if we would have gapped up. Like if we gapped up as much as we gapped down, then it would be like, oh, something is very strange here. So,
well, so we're now below the open. The second, the market's pulling back a little bit.
I was also kind of keeping an eye on Pulte Home. That had earnings, and we've been watching the home builders pretty closely, and that's kind of coming down from its open, so that's not a great looking first 5-minute bar there.
Yeah,
but that group has been so strong.
I mean, it's still up 1.5%, but just down from its open.
It's so nice to see a rotation into that group, because they all kind of tend to move together, and for the most part, the vast majority of them are looking nice.
So I've imported into the Thinkorswim platform that you're seeing right now the latest watch list that Justin and Mike assemble every day, and you can see over here, I'm hovering over INMD in mode. In fact, Mike, you were thinking about highlighting that one as well. That one is one of the big gainers so far.
Yep.
Luckin Coffee, LK, as you many of us have been really focused on that on the show. Solar Edge, SEDG, and then I think, is this a triple leverage chip ETF SOXL?
Yeah.
So would you like to look at any of those guys?
We can do any of them.
Well, let's start with InMode here. It looks like it's a nice gap up from yesterday's close here. And
can we go to the MarketSmith chart on that one?
Yeah, let's definitely do that.
I saw in the Q&A, someone was talking about how InMode was launching something called Evoke, which is the first hands-free device for, what was it, facial remodeling. So that's kind of interesting.
I could use that, like right here. Like, could they get rid of that? I mean,
I think Ed mentioned that yesterday.
Yeah,
it sounds like something we talked about, but it definitely is. Like we said yesterday, the action that we're seeing now looks like the beginning of a handle. The big downside is that base is pretty deep.
Yeah, it's 41% deep, and it's V-shaped. So those are like two things that we don't like to see, but it is within the character of this stock. I mean, this is kind of a high flyer, with strong, with a strong products, and is certainly the N, as the person who did the put the question in there. There's the N in CanSlim, the new product there. So I would just keep an eye on this one. Hopefully it'll handle out here for another week. That would be ideal, and tighten up. We'd like to see some of the days just be a little bit more on the mellow side, with smaller spreads. So the distance between the high and the low, we want those to reduce before you think about buying that. If you're in it, you're just sitting with it. No reason to add or really subtract.
I just wanted to highlight also the 50-day moving averages continues to rise, and despite yesterday's carnage in the market, look how InMode actually respected its 50-day. If you look here on the MarketSmith chart, it says SMA 50 within the data box, and that's a simple moving average at 43.93. You see that the low of that day was 43.90. So just a tiny little pinprick below that 50-day moving average. And I agree with you guys. If this could be the start of a handle, we'd like to see quieter action. that 99 relative strength really reflects the big move since the start of the stock's history here. And Luckin Coffee, shall we quickly just look at that, see how that's doing? Looks like it's in need of correcting that oversold position after an overbought position for a long time, right? But
Can
also,
we switch to the weekly on this one?
Yeah.
Because I think
Of
that's
course.
very important.
Where it is in relation to the 10-week.
In relation to
that was
10-week,
the
looks
point.
pretty good, huh? Yeah. Mike, what do you think of that bounce off the 10-week line so far?
That's very classic. So Bill would always say your first, one or two pullbacks to the 10-week are kind of a gimme. Now with this stock, there's nothing that's a gimme because it's so volatile. So if you're going to trade it, you got to trade it with very small size. But that is exactly what leaders do: is they come into the 50-day to give you a second chance to get in it. So if you're in it, this is actually where you can start thinking about adding. Now that's on the weekly. Now you go over the daily and see if there's a point there, and to add. And right now we're still so far away from the 50-day that I wouldn't be adding right now, because the distance from the 50 is so far, even though we touched the 10-week line. So I would give it, a few more days, and then, I'd rather pay over 40 than buy it here and risk it coming all the way into the 50. Is that how you see it?
Yeah, I mean, the other thing you could do, and I'm not doing it right now, is just size your position off the 10-week and try to do it that way. But I agree. It seems like getting back over 40 would be a good technical and psychological spot. Hey, can we jump to IIPR? A couple of people have been asking about that one.
I'm glad you mentioned that, Chris, because we talked about it after the close, Mike, and Justin and I were remarking about, well, here's a stock that completely defied Monday's drop, right? And poster boy for cannabis facilities operations. It's a REIT. It's been on IBD 50 many a week last year, then dropped off, obviously, when they had this massive, more than 50, 60%, maybe not 60%, but definitely more than 50% correction here. Nice to see it bound back above the 50-day. The RS rating is improving, and now it's looks like it's headed for a possible test of that 200-day, right? Justin, you have any thoughts on this one?
Yeah, I mean, it's got that classic kind of bottoming base look, and I mean, even though it's below its 200-day moving average right now, it is looking interesting, especially because you have, a lot of the pot stocks that are, kind of doing that setup. So, yeah, it's definitely one that's on my radar, which is unusual for a REIT.
How often can you trade a risky REIT?
So the news yesterday was they had acquired some property in Ohio. So I don't know if if Ohio is going green, so to speak. But that base, it looks like a cup with handle base. The only issue is it's below the 200-day.
Yeah. And also take a look at those very rosy looking earnings estimates going forward. Not often that you see a full year estimate well north of 40, 50%, 83%, a very, very small share float. I'm not sure if maybe this is actually the shares outstanding. Either way, that's a very, very limited number, and that really meets the so-called S in CAN SLIM, which is supply versus demand. In other words, it doesn't take very much demand to send this stock roaring again. It looks like there was a price offering as well, guys. Did we talk about that? Price offering must have been.
I'm not seeing that on the other news, but that's interesting.
Let's look at that, because this PPO reflects the proposal of the price offering, and then they really didn't waste any time. 2 days later, they, according to Market Smith, priced that offering. So we'll look into that.
If it's up on an offering, that's a sign of institutional demand.
Absolutely.
It looks like 2.9 million shares is what I'm seeing on briefing.
Oh, here we go. Yeah. January 24th.
That's 73.25.
Okay, 73.25. That's right. And so if we look at the the day that they proposed it, it was clearly at a discount to the current to the latest price because they want to encourage institutions to buy those shares, and it's up to them if they want to turn around and then sell it for a tidy profit or start accumulating shares. And then you can see on Friday's action, the low of 76.56 was still well above that price offering of 73 and a quarter. So very impressive post offering action there. It says that this REIT realized about gross proceeds of 217 million. And there was an option to buy some more shares.
So, and can we just jump to MJ, the marijuana ETF?
Sure. I always think about Michael Jordan when I hear MJ, but it's clearly not.
And if you go to a weekly, it's a little more apparent, but it's trying to break that downtrend that it's been in. Yeah, if you
want to go back here,
yeah, it's a tough.
Yeah. I mean, I can really don't even hit 3 highs on that line. So,
right.
Yeah.
So really the latest high is part of another pullback.
Definitely, maybe for
there's so much, there's a lot of work for all these stocks to do. And actually IIPR probably looks the best if you go to, Canopy or Tilray.
Let's do it.
Where, I mean, it looks like a real base there.
I just got a text message from Ken Shreve, who is answering a lot of the queues and on live right now. He suggested we go to Dynatrace, which
let's do that.
Been very topical. In fact, it was on among the top early winners on that IBD live watch list that I showed you on TOS, Thinkorswim. You can see that it's still in buy range, up for now the third up day in 4 days. That's impressive given this little downdraft we've had. This blue strip means that the stock is within that 5% buy zone, which is the best time to be buying a stock after the breakout. And this is another textbook example, I think, from all of our panelists' experience of stocks that are relatively new. They're still trying to find still engaging in price discovery, getting hit hard a little bit after the breakout, but also not down for the count, holding above the 50-day, and now retaking this buy point 27.29.
But the earnings are tomorrow morning, I believe. So I wouldn't step in front of that freight train.
And the lockup expired today too, so it doesn't seem like shares are hitting it right now, but.
Yeah, we have on, as you can see on the right side panel here in Mark & Smith, some news headlines there when you want to see that. Have we talked about the sponsorship in this one? Is there looks like right here 245 funds, so it's definitely under accumulation. That's positive.
That's what really got my drew my eye to it. There were so many A+ funds in it from the get-go, and partly, it was brought public, through private equity. It had been part of another company before, and so it seems to be well known to the institutional crowd.
I like that Contra's in there.
Yeah.
Oh yeah, that's
and the Wells Fargo growth in there too, which is that's a really good one.
So Contra, that's our IBD speak for the Fidelity Contra Fund. Then the ticker symbol is. I think it's FCNTX, but you can quickly look it up. And despite the fact that those holdings that these funds have to regularly disclose can be as many as weeks or 13 weeks or so after they've bought these new positions, it's still very valuable information for all of us because if we want to have a long-term position and a long-term leader, you want to see that the gradual and strong accumulation of these kind of stocks by well-performing funds.
Can we go over to PGNY? I was just looking at which stocks
that looks like it's been
kind of poking up.
Let's do it.
Looking strong
Mark & Smith chart here.
Highs for the day.
Ooh, wow, that's impressive. Up 3.8%, well above the Nasdaq's early gain of 0.8% or so, I believe. Let's see.
The Nasdaq actually pulled back.
It did pull back. Okay.
It's starting to rebound a little bit, but we were down into the 0.4% range, and now we're at 0.57.
Okay, and then the S&P up 0.4, the Dow Jones up 0.3. What do you like so far in this chart here, Mike?
I like that it's bucking the trend for, first it's a wild stock and I am trading it. And if you are trading it, you've got to, adjust your position size. But, where yesterday was kind of a tell in the market of which stocks held up, better, or which one closed
I really like that
higher.
scan that you did on Twitter. So people should definitely check that out. That you did in MarketSmith, the
Oh,
ones
thank
that
you.
held up. Yeah, very, very nicely done.
Yeah. So basically, what that scan was just stocks that were down less than the market, and that closed at the top of the range or the top quarter. And this, I believe this one was in there. And then today's action, so it was following on to that. So is really the way the market is like showing their cards of, what they like, what they don't like on kind of crazy days like yesterday. And, we don't know how today's going to play out yet.
That is excellent, Mike. I mean, I've got to catch up on all your fantastic tweets, I have to say.
I've been known to tweet occasionally.
You have become a Twitter machine. I mean, we got a Twitter in chief, and we got to get a separate title for you too, Chief Operating Officer of social media or something like that. But I mean, you're an operator.
My
dude.
fiance puts the squash on it every once in a while. She's like, "Okay, Mike, no more Twitter." I'm like, "But I'm having fun."
Does she turn the Wi-Fi off and?
She's gonna hide my phone, man.
Yeah. So if even if you don't have a Twitter account, please check out just go to twitter.com and then search for M Webster 1971. That's with the at sign. That's at M Webster 1971.
Well, I think they should follow all of us. If you just go to the IBD Live web page, you see all of our.
There we go. Yep. We can show that as well.
Another IPO or recent IPO, I guess, that we were talking about is SE Seat Limited, and that's one that just seems like it's been holding up real nicely as well.
That's a great point. Given that it's in a group that's have a rocket-like start, right?
Yeah.
Is it internet content? So you've got some of the FANG stocks doing very well so far. You can see, in fact, that just as Justin's noting, that the mint green strip is sort of suggesting a place where you might want to take some profits because you have a cup without a handle breakout, 38.10 is your buy point, and so the bottom border of that green strip indicates a 20% gain from the 38.10.
And you'll notice I didn't have to disclose that I'm holding this or trading this because I got rid of it like a few weeks ago because I just lost patience. It was like, it's not doing anything. It was slow and pokey. And then it immediately, like I think the next week started moving without me. And it still wasn't moving like in a big way, but just one of those nice steady movers. And then it had the nice gap up that I completely missed. So.
I think Chris has been trading in this one.
Yeah, I still have a little bit of it.
Yeah, so we're gonna go over there and like hit you because we're mad that you own it and we don't because I got worn out of it too.
Hey guys, why don't we look at Bill, BILL?
Oh yeah, that's good.
Because this has actually been on a prior radius. Unfortunately, I mean, I'm glad we talked about it as it was breaking out. In fact, multiple times as it was poking above this narrow IPO base.
This last 5-minute bar is really strong.
Amazing action. Yeah, let's go over to the toss chart. Here's Bill on a 5 right there. That looks pretty impressive right there. High of 48.24 in this 5-minute candlestick.
Wow.
So looks like there's really nice accumulation among select IPOs. Indeed, another one that may be worth watching. I'm not sure if this is still on the live.
I'll just say
CMG.
before we switch over, like this was another one of those stocks that fell into that same category yesterday, where it closed in the top part, top quarter, and it was down less than what the market was. So again, this is following on with that move of holding up. So it's very, very impressive action.
Now this is extended, you can't
buy it up here.
So I just want to make sure people are realizing that. We're just going over interesting action.
Looking at it, everybody, if the IPO buy point was 41.75 plus 10 cents, that's 41.85. Multiply that by 20%. If the stock can get up to 50.22, within 3 weeks or less, that could justify the 8-week hold rule. Mike, any thoughts?
Without a doubt, it would. Yeah.
Okay.
So do you want to explain that rule?
I'd rather you do it. I think you're
You're gonna make me do the hard work. Okay, so it goes back to something Bill came up with in the 60s when he mishandled a stock, and that's how we come up with our rules around here. And we just kind of follow, the model that he's laid out. And so what he did there is he just studied and said, you know what, if a stock goes up 20% or more within a 3-week time frame, it just increases the odds that it's going to be a big mover. So I'm going to put a time element in there. And so he said, okay, if that happens, I'm going to hold it for 8 weeks from the pivot point. And so that's a rule that we follow a lot. You don't let it turn back to be negative on you, but lots of times just having a time rule will help you from really bad days in the market. So
and so just to be clear, that that breakout week becomes week 1, and it's best
Yeah.
to do this on a weekly chart. And then he actually said he'd like to hold all the way through that 8
that Friday.
Right. So
Yeah.
and Certainteed was, if anyone wants to go check it out, Certainteed was the one that he was the one that got away for him, and that was one of his big pet peeves. When he was in a stock and then it moved without him.
That was 61 or 62.
I think it was 61.
Okay.
But then, of course, he used that rule very successfully for Syntex, and Syntex was kind of the one that started the business and everything.
Well, it definitely started the
Can
business.
we jump to Solar Edge? There were a couple
Let's do that.
folks noting
Absolutely.
that.
It's nice to see a little bit of rebound here. You can see
Yeah.
that according to Marcus Smith pattern recognition, this is, to me, very spot on with the 5% buy zone. But the question is, do you want to be buying after this big drop? It's a little scary, huh? Yeah, let's examine this. 152% jump in volume versus the 50-day average on Monday, and that was a 12% drop. Kind of out of character, wouldn't you guys agree?
Well, it just makes the stock look broken to me.
Right.
That big of a drop. You had a nice gain in it from the breakout. Sure, pullbacks to the pivot are completely normal, but not like that. When you've got that much of a gain, when you're coming all the way back and giving it all up. It's great that it's getting support here. But it just looks broken. So this is not viable to me.
And if you have a position and you froze yesterday because it was just so bad, you just take this as a chance to lighten up or just exit. You can always buy the stock back. Yesterday's action was just pretty extreme. So I couldn't sit with that.
Yeah, also let's consider the nice run it's had from an initial, I guess, first stage base down here. This looked like a cup within this big cup, and then maybe over here was another buy point. So it's had a very nice run here. I would say just as a healthy counterpoint to everyone, I completely agree with what Justin and Mike have been saying, especially if you were a buyer here. I would have, I definitely would have sold to at least secure some profit and avoid a loss. But let's say you bought over here and you've got this
that's a
huge
different
gain.
That's a completely different ballgame.
Different scenario here, right? Because now you can afford to see how it tests that 10-week moving average. So it's all it all depends on the individual situation you have. It is nice that the relative strength line bolted into new highs, but keep in mind, everybody, that as we'll often write in investors.com, solar energy companies are almost kind of at the whim of oil prices. You see this huge drop in crude oil. This is USO, which tracks the price of WTI futures. And look at that big drop. It's pretty amazing that Sedge was still rising in the three prior weeks before that.
Mark Thomas points out that over the weekend there was a story about a Ponzi scheme with some solar sellers up in Benicia. Yeah, and so he's wondering if maybe that might have had an effect. I don't know if they were, if Solar Edge was some of the equipment being sold or something like that. But I mean, between the oil and those news headlines, maybe that would
That
accounted
is very
for.
possible. That's a great point. I actually
Yeah.
read a little bit about that story, Chris, and it was reported in the Wall Street Journal, the LA Times, and basically it was a married couple, who duped a lot of institutional investors, including Berkshire Hathaway. Berkshire Hathaway
Wow.
actually invested more than 300 million in this company
Wow.
in exchange for making some kind of investment in renewable energy credits. But it turned out that they really didn't have the power to turn those investments into the buying and selling those credits,
Right.
and so it's just a pure Ponzi scheme, and it's amazing that that a lot of institutional class investors were involved. That said, you can see that at least uh, will that stop the growth of clean energy? Personally, I don't think so.
You know, another stock that was one we were talking about yesterday that was holding up pretty well was WGO. That's
Yeah.
Winnebago,
Let's do it.
and you know, this it's out of position right now, but it's just again, this is one, the relative strength line has been really, you know, spectacular on this. You know, we were kind of joking that, you know, is this one of those things where, you know, people are, you got the home builders and then, you know, you got
Yeah.
your, you know, home, home away from home type thing. Yeah, it's just interesting that this is another one that's holding up well and doing well today.
And so was Thor had been trading
Yeah,
nicely
Thor's up.
too.
Yeah, Thor's
But
up.
that just has a lot of overhead
Yeah.
resistance. So,
hmm
but they do have the Airstream, which is the
I know
cool,
that's
the
Mike's
cool
dream.
stuff. Yeah, when I gotta have an
Mhm.
Airstream.
Mike, I'm glad you mentioned Thor. Do you think that if the stock can move sideways a while, given that this is still part of a ginormous bottoming base here, do you think there could be another buy point that emerges for those who have some conviction?
Yeah, it almost feels like if you look at the weekly chart, it gives you a sense of a 3 weeks tight type of, you know,
Yeah,
right there.
right.
You know, it might not be exactly perfect, but it's certainly in that genre.
Definitely in the
But
genre. Yeah.
if you're buying out of position, like you know, out of pulling back to a 10-week line, like what we're talking about with the LK, or a 3 weeks tight, you don't buy the same size as you would buying out of a base. So out of a base, it's more of a normal size position, and one of these alternative pivot, or not really alternative buy points. You just have to position it smaller and keep a a really tight stop on it. But yeah, it looks good.
Very good. Let's go back to Winnebago then. Justin, do you see any possible follow-on entries here, given that we are extended, in fact, from that flat base?
Not yet, but I mean, it looks like it did trade tight for 2 weeks, but you know, I don't see anything yet, but it's just one to keep an eye on. This is definitely on our universe list. Another one that might, you know, offer a viable entry is RH.
Let's do it. Leaderboard stock here, half position.
Yeah.
We did engage in some trimming to reduce our risk on leaderboard. 6 companies on the leaders list went from a half-size position to a quarter. This is something we're doing new in 2020.
Yeah, right.
Yeah,
Yeah,
first
and it
time.
started with Apple. You know, and again, there was nothing that Apple was doing wrong. It was just one of those things where it had gotten, you know, a little extended and kind of crossed above an upper channel line. So we just wanted to, you know, kind of lock in some of those profits on the way up. But yeah, as you mentioned, RH, this is one that we've had for a while, and it's a half position. As we've mentioned and talked about a number of times on the show, that we've got a lot of half positions that we've done. We've kind of spread out, so we've got over 20 stocks, which is a little bit unusual, but it's something that's been working very well for us, having that spread out approach. It's kind of allowed us to hold on to things a little bit better, I think.
Right.
Yeah,
And the reason that
go ahead.
we trimmed yesterday, not because stocks were broken, but we had a lot of exposure to the market, more than we wanted to. I think we were around 150% invested.
Yeah, 140% to start the day, and I
Yeah.
think we, you know, trimmed down to like 100 in the 120s.
And then as just you know, an extra measure of because there were no more stocks that we really wanted to sell, and so we put on a single position of SQQ, which in effect has the effect of lowering our exposure closer to 100%, and that's what we were really trying to do.
Yeah.
Just trying to even it out and see how this thing shakes out.
And it wasn't, it's important for people to realize that that wasn't us trying to short. That was simply, just like you said, just to hedge because our stocks weren't giving us sell signals, the
Right.
clear sell signals. And especially since we're using the 10-week, a break of a 10-week moving average, and it was Monday, we had to wait all the way until Friday to see how that plays out. That's why we had to do that. And, probably if we take out today's high, we might have to revisit
Yeah.
and remove that hedge. And it looks like it might do that.
I'm glad we're
Right
talking
away.
about this because there's a lot of Q&A regarding the hedge that we placed on leaderboard. And Andy Livian is directing a question to Chris, if you don't mind answering this
Sure.
right away. He's asking, can you please clarify how many SQQQ call contracts would you buy to hedge a 1 million portfolio? Thank you.
Okay, well, I guess so if SQQ is
And he's also
trading,
talking about the options.
right, I understand. So you need to start with, so let's say $100,000 portfolio, so I can don't have to type so many zeros into my calculator. So with $100,000 portfolio, and I would look at SQQQ, which is now trading at 2021. So 100,000 divided by 2021. So that gets you nearly 5,000. It's 49.48. So we'll say 5,000 shares of SQQ to get.
And so you use the stock price there, not the option price, because you're trying to come up with the position of the stock in this case, or ETF.
Right.
Mm-hmm.
Right. So, well, no, you can do it both ways, but we'll talk about it first in terms of the option. So in this case, you'd buy, if you you would buy 50, is that right? I'm sorry, yeah, 50 contracts of SQQQ, and if you're at a 0.5 delta, you would theoretically be half hedged, although if the market sells off, that delta is going to rise, and so you would be probably more like 2/3 or even more hedged, because it just the leverage that you get expands when you have a big sell-off. And I talked about that yesterday, how my the delta went up 20% from Friday to Monday on the calls that I was having. So that's how I would handle it on a portfolio. And if you really want to get completely hedged, you just buy, I don't know, you can buy 70 contracts, something like that. That would probably do it for you. It's never a perfect science because your stocks could move faster than the rest of the market. And then in general, what I found, if you're going to use SQQ to offset a certain position of your portfolio, you need between about 70 or 80% of the portfolio defined by SQQ to get that coverage. But again, weird things can happen where you might have some stocks that are bucking the trend, and so SQQ is going up, those other stocks are going up, and you think you're king of the world because you're up huge.
You're
on
never
a
king of the
market.
world.
Not yet.
Well, we used to call it
think
masters
you
of the universe.
Masters of the universe,
yeah,
right?
but
Exactly.
we'll be a little more, a little more humble.
So that's the
king
whole
of the
thing.
world.
But then the downside is, today I started unwinding the hedge, and not as up as much as I would be today without the hedge, although net, I'm still in a much better place than if I had sat through it yesterday unhedged.
Hey, Chris, a follow-up question. So let's review what you said. You were talking about hedging a $100,000 equity portfolio, and given that the current share price of SQQQ is 20, you were saying 50 contracts would give you command over 5,000 shares. 5,000 times the current price of 20, that comes out to $100,000. So
right, but remember with the call options, the delta is, if you're buying at the money, it would be around 0.5. So theoretically, it's going to be half of that hedge. So if you really, like, out of the gate wanted to hedge your portfolio with options 100%, you would buy 100 contracts.
100 contracts. Now, what about the fact that this is, I believe, a 3x levered ETF, right? And
Right.
you're buying options on that. The fact that it's a triple leverage, it's still, you don't have to compensate for that.
No, because in general, the triple ETFs mimic what a stock does, and
Right.
so yesterday at the open, the market was down about 2%. My portfolio unhedged was down almost 5%. So it's not, it's not. So it's like 2.5 to 1 rather than 3 to 1, and that's uh, where the whole hedging with the options, why even with a half hedge you get more than half protection because of just the way the market was. I had a few stocks that weren't falling as much as the market. So
to your point there.
Yeah.
Great. Okay. I think that
It's,
answers a lot of questions.
Henley, and I wonder if this is Henley that we spoke with at the level 4.
Probably.
He was talking about how he uses the average beta of his portfolio,
Mm.
and assuming that SQQQ would have a beta of 3, I think it might be a little bit higher because beta is usually versus the S&P 500.
The S&P,
right? But so he kind of uses that as a gauge of how much to hedge. And then also I saw in the Q&A someone was asking how far out you go, Chris, for that.
Oh yeah, that's a good point. So I go at least 45 days. So I've been trading the Marches and the Junes, and the whole idea is I want to take the time decay out of the equation. And I used to be of the mind like, oh, I don't want to spend a lot of money on a hedge. And really, the true cost of the hedge is the spread, because as soon as you put it on, your portfolio is protected, and up or down, it's just a matter of how much protection you want. The true cost is really how much does it cost you to get in and how much to get out.
Can we go to the Qs and look at it, because
looks like we're getting near.
Yeah, we're approaching the highs of the day, and
very good. Yeah. And let's see here.
Maybe
this
on
is
Thinkorswim would be good for
Sure,
this one,
let's
just
go
to
there.
see the action, because this is pretty ideal.
So that we still have the 5-minute chart. You can see that
Yeah.
this was the opening 5 minutes, and we're getting close to the high wick of that bar. So very, very good. You can also see, thanks, Mike, for pointing it out. This is a nice bullish gap from yesterday's close, and we started to fill in just a little bit from the first 5 minutes, but now we're getting back above. So also thanks to Charles Pascu about noting BOUT. BOUT is our IBD Innovator Breakout Opportunities ETF. That's quite a mouthful. Did I get it right?
Yeah, we look at it on a daily. The 5-minute doesn't.
Yeah, let's definitely look at that. And also, it might be a little bit easier to see on a. It's nice to see that it's rebounding after a bigger than average drop on Monday. Let's see, Monday it was down.
That's not going to tell you.
Yeah, and
it was down 1.6%,
1.7%.
So actually, in line with the market.
Yeah.
Yeah, and
the
then
here's
this is definitely notable because we have a breakout, technically speaking, from either a shallow couplet handle or saucer width handle. You can see that the depth was much milder in this base than it was in the prior base, so that's a positive. You see that I personally will only invest in ETFs or stocks that are trading above the 50-day, and then the 50-day is above the 200-day line, which is that black line.
And Chris and I just did a webinar on, kind of a little bit. We were more focused on the IBD 50 for the webinar, but one of the things
all the same principles.
Yeah, exactly. So
can we circle back to RH, because there's not volume there, but that price action, I think this one is actually actionable right here as it bounces off the 50.
Mm-hmm.
Oh yeah, that's great.
Yeah,
great,
so now that we've
rebound.
kind of gone back above that gap area, we're right there at the 50. I think you could enter here and just use yesterday's low as your stop, so it's pretty tight. It's almost a frosty trade.
That's the first time I hear you use that word. Can
Yeah,
you?
you know,
We went to the aquarium with my son. He loves sea creatures, so we went to the aquarium this weekend, and there's an RH right there in Long Beach.
oh, really?
And
Oh,
my wife, I was commenting to her how this has been on the leaderboard for a while, and my wife is, she's always doing things at the house and stuff like that. Fortunately, she does not. She was telling me how her brother was looking at the drawer pulls, and they're like $30 each, and you think of how many drawers you have like in your kitchen or something like that. And it's like, oh, no wonder they're making money. But she also was saying that she feels like a lot of the like the influencers that she follows, like on Instagram and stuff like that, she feels like a lot of them were really getting into RH. And so I don't
It's
know
a great store. I haven't been in forever, but when I was, it was, but you're certainly paying up.
yeah.
And then we used to love that aquarium. We had annual passes when the kids were little.
We have annual pass. Yeah.
It's so much fun there.
you know what, guys? So it's interesting. I heard that Nordstrom and maybe possibly Macy's is going to start putting in bars inside their stores, and that could be a sort of influence from RH, given that their cafes and restaurants have been really a big hit inside some of their stores. Was there when you went there? Was there a little cafe that you could sit?
I was walking by so quickly just to make sure we did not, veer in. I kind of put the blinders on and
he's a smart man.
Forward. Hey, I think our 5-year-old's getting restless. Don't look that way, honey.
Yeah, I visited the one on Melrose in WeHo, West Hollywood, and didn't see a cafe, but I have to go back and see whether they've gone ahead and put one in. They have beautiful rooftops too. The rooftops feature all of their outdoor patio furniture and stuff. So,
can we jump to Baba, because that was something that was we were concerned about yesterday, and it's retaken the 50-day today. It's off the highs of the day, which is odd because the market is right back near its highs of the day.
That's very positive action. Looks like earnings won't be due until 16 days. We'll have to.
I think it's more rather than
an update on
a buy
coronavirus here.
It's more just to monitor how the market is looking at, what's going on in China. Now, if you had bought it out of the base, maybe at 180 or so, you're looking to add off of the 50, but I wouldn't add yet. I would let this settle down and then form some sort of area of resistance and wait for it to go through that. So, it's just something to watch and monitor, as well as some of the other big China ones. But this is the quality China stock. So I'm just going to be monitoring, but not buying.
Okay, let's move to TPX. James
Absolutely.
and Tyler are both asking about this one.
Yeah, shout out to Michael Dominguez too, because they both were noting some unusual strength here. Do we still have a quarter position in the leaderboard with TPX?
Yeah, earnings are coming up in a couple weeks. This could be
this very frosty.
Yeah, it's actionable.
Yeah,
I would say.
Right here. The question here,
and the other thing,
early buy point, would you say? Because the standard buy point is 92.43, but we're hopping above 89.86. Chris?
Yeah, and the thing that really caught our eyes yesterday was this. I guess it was an outside day. So when the market was, it fell with the market, but before the market got near the highs, this thing was already coming back strongly. So that was, good action, and a reason that we didn't, we've been trying to be patient with this, and it really has tried our patience. But now it's starting to act right.
Shall we look at one of its
sleep number?
Took the words out of my mouth. Exactly. Here again, it's very interesting pullback after the breakout. Chris, any thoughts here? Earnings won't be due for a couple weeks, but
let's go to the weekly.
Sure. The daily shows that 2-day pullback having lower volume than the prior week, so that prior update. So that to me is a good thing. And up for the week a little bit now, right now, Chris.
Yeah, it looks better to me on the on the weekly, I guess even though I'm a Sleep Number customer, I like TPX as a stock better just because it broke out first, but neither of them have done a whole lot. And so again today it's TPX that's moving first. So that's where my focus is going to
And
be.
let's look at the daily. And
Sure.
the market was telling you something yesterday between the two of them. So go to the daily on this one and look where this closed.
Yeah.
Can we do the closing range on that?
Yesterday's?
Yeah.
Yeah.
Yeah. There we go.
There we go. So
33.
what is that? 33. So that's near the bottom. Plus it was, it was down, not as much as the market, but it was still down. But where it closed was telling you that people weren't dying to support this stock. Now let's go over to TPX. And to what Chris's point was earlier of, it shook out in the morning. It had been, this thing has been kind of dead money for a while, and it looked like it was going to just fall out of bed, so to speak. And then it firmed up. Let's go to the intraday real quick.
Yeah, the closing range, Mike, 93% during that reversal.
Perfect. And how much was it up on the day?
A couple percent for
Yeah.
sure.
So on a down day, so that was the market telling you, okay, this is a merchandise that it wanted, and you could see we gapped down and we just pretty much went straight up, and then held those gains for the last couple hours. So that's the way you have to look at the market, is what is it telling you on those bad days, and it gives you a lot of information. And like Justin said on Twitter, I did put a screen with all the stocks that made it through yesterday, so you might want to look at those later on today.
People were asking, how did you create that screen? Was it just that you went through the watch list and just looked at the stocks that were up for the day?
No, it had nothing to do with the watch list, and I have all the screening components in there. And one of them was that the key thing was the closing range being at 75% or higher.
Okay.
And if you look at the tweet, it has everything. In fact, I put two different screens out there, but the one
that sounds like you.
Yeah, I was going to put a third, and then I'm like, okay, I'm going to stop. But look at it. For people who don't have Market Smith, why you wouldn't have Market Smith, I don't know. But if you don't, if you don't have it, I put the stocks there to be nice. So,
okay.
So take a look.
And Nancy is asking, Nancy Nelson, do those mattress stocks trend with the home builders generally? And you
would think, right?
Yeah, it makes sense. Dave, do you know how to do comparison charts in Market Smith?
I haven't done that in
probably not the best time to learn.
Why don't you why don't you walk me through it?
We'll wait for Arusha.
Maybe it's right here. Is this? Yeah, I think I found the little
that's it.
The little
there you go. Click on
icon.
that.
So click on that, and we will have another chart that comes up. Very nice.
Okay, and then add ITB.
ITV, you got it.
ITB as in boy.
Oh, ITB, the house home builder.
Yeah.
Sure. Let's do that. And
unleveraged.
You can see,
yeah. So the general shape is there, although it looks like in that August to September period where TPX was basing and ITB was rising because the home builder stocks. So there's definitely a tighter relationship between the stocks and ITB because the home builders dominate that index. So there's somewhat
interesting. And there's a lot of chatter about PulteGroup too. We've been highlighting a lot of breakouts in this sector. Let's just quickly go here because it's a pretty notable gain today, outperforming the major indexes. You can see that this is clearly extended, unfortunately, above the blue box that denotes a 5% buy zone. But if you are investing in the home builder space, you definitely want to see these kind of moves up among its peers.
Oh, yeah, that's nice.
Look at that RS line too. You can see that the RS line is clearly at new high ground, or at the breakout, not exactly,
no.
but it was clearly going at a 1 o'clock, 2 o'clock pace. It is very true though. In my experience, a lot of great stocks will have the RS line either hit a new high before the breakout, at the breakout, or soon after the breakout.
Right.
So there's going to be a little bit of variance there. Nice fund ownership too here, guys. Look at this, 1,640 funds. This includes mutual funds and hedge funds. That's up from 1,291. That's a massive increase on a year-over-year basis. There's some interest here in CRISPR. Let's pivot to biotech space. The question from Michael Ash. Thank you, Michael, for joining us as always. Lots of support on CRISPR, trying to find support near that pivot point. Absolutely true. A lot of overhead. Absolutely true. That's possible. Although I would say that this is quite a big drop. In fact, it's tough to see such a huge gain turn into a virtual loss at this point. So someone could have sold as it struggled to get back above the 50-day to preserve at least some profit. But on the other hand, this could be another second buying opportunity. Mike, do you have any thoughts on this one?
Yeah, no, I wouldn't buy this. And what's going on there is the 37 little flag there. If you can just point to that, Dave.
Over here,
the
yeah,
37.
Right.
Okay,
yeah.
That's showing it had that power from pivot that we talked about with the other stock, where it goes up. Went up more than 20% within 3 weeks out of the base. And so you want to try to hold it for 8 weeks. And if you go in the top right corner, you can see it says 2% from pivot in 52 days. So we know that we're more than we're 12 days past the 8 weeks, the 40-day holding time frame. So at that point, you were weak and you were underneath your 50-day and your 10-week. And so that's when you can let the stock go, because what you said was key. You never want to let a big winner turn into a loser. And as it was coming closer to being flat on that position, you want to exit that, and then you can always get back into it. I don't like buying stocks underneath the 50-day, and you're way underneath the 50-day. So I wouldn't touch this. I would watch it. It's a great story and everything, but that's, you just don't want to keep holding and holding and holding and hoping, just exit and move on to something else. So that's how I would look at it.
Can we jump to AAXN?
Absolutely.
There's I had mentioned it earlier, and then a couple other folks were asking about it. So, yesterday, not a great close. It looked much better on the weekly if you jump to the weekly.
Yes.
So it had a big move last week, and then yesterday and now today, that the action is actually very tight. So it's still, acting well. And let's go back to the daily.
Sure.
And I guess for me, I would really, you could add more shares here, but basically I don't know, you really, it depends on where your first add was. But I'd really like to see it take out 80 and hold above there, right?
Yeah, I'm in it too, along with you. And no, I'm not going to add to it. And yesterday, can you hover over the price action? Because I think it was down over 3%. And on the chart, it looks like nothing. It was an inside day, right? Meaning that the high and the low were contained within the high and the low of the prior day. So you look at it and go, oh, that looks nice and tame. Down 3%.
Yeah.
So we're playing with fire with this one, and there's a whole FTC lawsuit going on. So I've got a small position, and I'm not looking to make it a big position because it's risky. But the story is so compelling, and this was a Twitter homework assignment this weekend. We're just back to 2003 for the move. And let me tell you, that was my Saturday. That was so much fun. If you haven't done it, you do a change date. Can you show them where the change date is, Dave?
You mean right here?
Yeah, right there.
Yeah.
You can just go. It's one of the best features in MarketSmith. You go and you change the date.
The down arrow to the right.
That was not a good throw.
Hit the rim.
You can change the date and then just play forward one day at a time, and you pretend that you're in the stock, and you ask yourself, what would I do with it? Would I add to it? Would I sell it? And it's a great training tool and something that we use around here a lot. And the key is to be intellectually honest with yourself. If you know what's going to happen, you've got to erase that from your mind and just pretend that you don't have that knowledge. And this is how you practice. It's kind of like if you're a golfer and you're going to the driving range. This is, you guys are golfers, right? So this is your driving range.
Right. Hey, the market just hit new highs for the day, at least on the Nasdaq. So it's up 0.94%.
Let's go there.
Oh, wow.
Let me type in 0 NDQ. And
well, that'll be a little
Nasdaq
delayed.
composite.
If you go to the Qs, it'll be updated.
Oh, okay. Let's go QQQ.
Should be right at the high of the day.
Yes,
yeah.
it is. In fact, yeah, up almost 1%. And let's check the volume right now. See how that is moving.
96. Oh, you mean overall in the market?
Just overall.
Yeah.
I was just curious whether we're kind of waiting for Apple's report after the close.
Plus the Fed.
Plus Fed
Plus,
tomorrow. Correct.
We don't have manic buying in the way that we had manic selling yesterday. So
that's right. So you can see I've highlighted here the current change in volume versus the same time yesterday. I wondered whether we could just quickly go to IBD stock of the day because I guess right now it is the product placement minute of the hour.
Right.
And I just want to highlight the fact that we did cover Exxon right here. You can see that on the screen. Just as Chris, you had mentioned, you learned a lot from Jed Graham's sort of reporting on its battle with the FTC and that it made an acquisition of a so-called failing firm, but the FTC argues that it's limiting competition and wants them to actually separate into two different companies. It's a very odd case, but definitely worth reading. And it looks like there will be some kind of decision around May, so something to keep in mind. Check this out, Snap. Why don't we look at that stock, because Justin highlighted that one. That was also in the IBD stock of the day. Justin, you have a moment and want to talk about the chart action?
Yeah, so again, one of the things that kind of attracted me to this, we did have that whole conversation about the Facebook kind of what happened to Facebook after its IPO, how this kind of came down, very sharply as well. Now, one thing that Snap is lacking at this point is the profits, but they do have a lot of revenue growth. So double digit going back pretty far, and these are not small numbers. This is, 446 million was their last quarter. But what I liked about the chart action is how it, really just kind of got support at that previous resistance. So, a lot of times this happens where you get these resistance levels, and in this case, it's around 1836, 1817 that it hit. That was the area of resistance. It blew through that a week and a half ago, and now it came right back down to that level. Seems like it got support, and it could be something that kind of moves from here. Now, again, it does have that extra component of not being profitable. That always makes us a little nervous. We prefer profits, of course, but it's got a lot of those other elements. So it definitely looks interesting.
And it found support at the 21-day too, which is helpful.
Mm-hmm.
Yeah, and it's also
I guess that's the 10-day on your chart.
And a lot of times you'll see that kind of multiple areas of support will kind of converge together. It's you get a moving average line that's also at that previous area of resistance, and so sometimes you get like multiple things that are saying, hey, that was a good place to get support, and that was one of the things that I was just noting on Snap.
It's feeding off the strength of the Internet Content Group. Let's take a look at, say, Facebook. I have some shares in an account I manage, and you can see that one is extended. Let's look at Google. This one, or Alphabet, you can see it's now trying to reach that 20% profit zone. And what would be another one that would be related? SE, I mean, right? Isn't SE? That's part of the same group. And that we talked about this one briefly, and it's at the day's high. So going back to Snap, I think, Chris, remember how I like your comment many times in the show, how just cover up the name. Look at the chart, right. And if you were to look at Snap's chart now, you would probably never have thought it was Snap as opposed to when it first came out. You can see
Sure,
that this was a
that's absolutely true.
humongous drop. Well, I mean, this is incredible character change. And now, you know, this also brings up the issue about overhead supply. When is overhead supply no longer relevant? And Mike, you want to correct me if I'm wrong.
It's
but
1 and 3/4 years.
That's it.
Yeah.
That's it. Yep. So
Yeah.
if we look over here, that's the February
free
of
and clear.
2018. So that's free and clear, right? That's almost 2 years, and that would be a clear sort of level of resistance, we would think. But let's also look at the weekly chart, everybody. I like the fact that, you know, looking at the big volume weeks over the past 3 or 4 months, the biggest ones are up weeks.
Yeah,
you can see these. What I love what Scott O'Neill, our CEO of our parent company, has said. He loves to look for skyscrapers, blue skyscrapers, before the breakout, because that indicates that there is some heavy accumulation going on before the potential breakout. So we're at 7:30 Pacific time, 10:30 Eastern time. We've tried our best to answer as many questions live as well as
let's answer one more
text.
question before
Let's
we
do
start
it.
doing the.
Can I say one
Okay,
thing, because
sure.
we never end on time?
Yeah.
To go along with your point of covering up the name
Mhm.
and my point of the doing the change date. If you
Right.
have a friend, right, or maybe a meetup group should do this, where you pull up a name, you block out, you pull up a stock
Right.
in history, right? It could be a good one, could be a bad one, and you cover up the name and you play through it day by day, and everyone asks themselves, what would they do? Like, that would be a ton of fun. Like, that's my idea of fun.
Well, I'm
Learn
sure
a
your
lot.
fiance would say, "Oh, I'll do that," and lose Mike for 4 hours. So. The stock I wanted to take a look
Yes.
at, Kurt Hostetter asked about it, and a couple other folks, and that is Palomar,
Oh, very good.
PLMR.
That was on my list. You know, I didn't get bombarded by any paper airmail, so I'm glad you did.
Yeah.
There's always tomorrow, my friend.
Right.
I'm ready to catch him, Mike. Have you been practicing?
Yep.
Very good action in this sector leader's name.
Mhm.
You know, Juan, Ken, Rachel, Alan Elliott, Scott Laytonen, other members of the markets team, Terry Jones. We've all probably written about this once. Nancy Gondo as well, or twice over the period of this huge run. But arguably, this seems like a middle stage base. You know, cup base has got to be 6 weeks, and at the end of this week, that would be 6 weeks for sure. It looks like this is probably too deep to be a flat base, but we can quickly check.
It's
because
20%.
Yeah, 56 to 45. On the other hand, check out that RS line. Very, very nice 1 o'clock action there, and it's rising after a recent secondary offering. This is part of that. In a way, is a cousin stock to the home building industry, because with low interest rates, mortgage insurance is definitely going to be in need. Very strong institutional sponsorship. Justin, what do you see? Do you think this would be watch list worthy?
Sorry, you know what? I was doing a.
Okay, Mike.
I'll step in here.
I have a knack for catching people when they're not ready to answer.
But yeah, well, this has been on our watch list for quite a while. I mean, the only thing is that this is a thinner name, you know, so less than 20 million in average dollar volume. It's starting to get up there, but that's the one thing that, you know, has kind of kept it off my kind of almost ready watch list.
Well,
Great
this
point.
one had the flag that we talked about, where it went up. If you go to the daily chart, so that's where this really worked out. If you had bought it off of that IPO base, it went up 20% within 3 weeks. So you'd hold it for 8 weeks. And once you get out there, you can say, you know what, I'm going to hold this until, you know, a decisive break of your 10-week moving average. And if you keep things as simple as that, that would have kept you in the bulk of that move, you know, pretty much until the end there. Now, if you're looking to get back into it, I think, Dave, you hit all the key points that it was, you know, it's too deep to be a flat base, and it's too short to really be a classic cup, but it is going over the high from a few days ago. So if you were in it from way back then and you wanted to nibble on it and add just a tiny little bit here, sure. But as a new position, you know, like Justin said, it's on the thin side, and it's not a perfect type of setup. So you'd probably pass if
Right.
it's a new position.
Although, if you look at the prior 2 days of action, so the market was down both those days and it was up. So there's a lot of
Yeah.
relative strength, and you
Mhm.
see that in the line that's shooting higher.
Yep.
Okay, Dave, now let's do the wrap up.
Okay, that's great, and I'm going to be as tidy as possible here. We talked about the huge number of stocks again, starting with Snap that Justin noted, very actionable looking. IIPR definitely worth looking at for your watch list, but not anytime soon for a breakout necessarily. DT, Progeny, PGNY, LK. InMode, INMD, all very new, relative new IPOs, definitely worth watching closely. BILL, acting very well. Sedge, Solar Edge, let's take a quick look there because there's a lot of interest on the Q&A. You can see it's still off the highs, but hanging in there a little bit. We talked about the sell strategy there. Cyclical plays in relation to low interest rates, WGO and Thor, THO. RH, also in my mind, a cyclical play, interest rate sensitive, given that, probably the cheapest thing in the store is like a $200 lamp or something. So, it's a very pricey merchandise there. Serious luxury kind of retail firm, but acting very well and this fantastic fundamentals. We've talked a lot about how to hedge and de-hedge with SQQQ. Thanks to Chris for a lot of great detail there. TPX, SNBR, acting very well. Watch them together. Look at the closing percentage, price close. That was a great point that Mike made. That's easy to examine on Marcus Smith.
And it's called closing range.
Oh, closing
is what
range.
we
Thank
call
you.
it. Yeah.
Closing range, right? So ideally, right, 50% or above signifies some healthy institutional demand, particularly if it's an up day, if it's near the high, that's absolutely really great. Just like what we saw in that one stock that was probably TPX, and then CRSP. We talked about the 8-week hold rule and the pullback, defending your profits. AAXN, Exxon, a lot of interesting news behind the news there. Palomar, PLMR. Please reach out to us through IBD's customer success team if you have any issues regarding receiving the emails. We'll try to make sure that everyone gets that recap that will include the watch list, the ready list, and on an occasional basis, Chris's favorite mutual funds that are proven winners in the long run, and what stocks they own. That's very important in our CANSOM analysis, as well as the long-term leaders list. Hope everyone's enjoying the Q&A summary. We'll be back same time, same place tomorrow. And Chris, another note.
One final comment. There's been a lot.
You couldn't help
I
yourself.
know.
Man.
It's actually a technical
Housekeeping.
thing. Yeah, housekeeping. So a lot of people are saying there's the view options have changed and it's not quite the same. So we will alert our guys on the video production team to talk to Zoom and find out what's going on and get things restored if that's possible. So yeah, we're watching these and we'll pass on all your comments.
In fact, I'm going to do that. Thank you to Mr. M. McD, really highlighting the detail about the change in the platform. But thanks, Chris, for the extra point. Once again, I can't overemphasize the usefulness of just spending a minute or two going to Twitter and checking out our fun and informative and hopefully profit-making tweets for all of you through the hashtag IBD Live hashtag. So a big credit due to Rachel Fox and everyone involved with that. You can follow all of us and you can find the Twitter address in our Meet the Speakers page of IBD Live. I think that's a wrap. Thanks again for joining us. We really enjoy having you, and we'll talk to you soon, obviously early tomorrow, and have a great trading day.